Hey guys, and welcome to the Working Money Channel. So the saga continues. The SVB story has been front and center in the crypto space, definitely on Twitter. More information is coming out every single hour, and so I thought it is the weekend, and this is the breaking story that has been getting everybody interested in what is going to happen next, not just in the crypto sector, but in the banking sector as well. More theories are coming to light too as to why this is happening, and are there some strings being pulled behind closed doors? And so we're going to get into more of this today. Truth Seeker here on Twitter posted this: all banks went into the red last night. So guys, here's just a list of some American banks that did go into the red after the SVB collapse on Friday. The weekend is this weird time because nothing is open. I mean, there's no business hours right now. Nothing is open, or allegedly nothing should be open, right? And all these banks are feeling the burn. Let me just read you off some of these: Western Alliance Bank Corp, Charles Schwab, Signature Bank. We've got Bank United Inc., Comerica Incorporated. So basically the entire banking sector, or at least a large portion of it, is feeling that ripple effect from the SVB collapse. We've got Bank of America Corp., National Bank Holdings Corporation, just to name a few down here. There's Wells Fargo and Company, JP Morgan Chase. So even some of the bigger banks are going into the red. We also happen to see this from Mr. Whale here. Crypto investment firm Morgan Creek Capital found to be a large depositor at Silicon Valley Bank. Bitcoin maximalist Anthony Pompliano is a partial owner of the firm and has been urging the government to bail the bank out. Now here's a list, guys, and this is just a partial page from the first page of this list of all these managers, the private fund name, the private fund gross asset value, and on what date they filed. And then finally here in the last column here, the custodian, you guys can see it is entirely custodied by Silicon Valley Bank. And, this is just a partial page, page number 1. And as you guys can see on the left-hand side here, we aren't even getting to the first letter of the alphabet yet. These are all companies that begin with numbers. So you can only imagine to what extent, a lot of these companies, a lot of these organizations are feeling the loss. So the other interesting part about this, Bitcoin maximalist Anthony Pompliano is a partial owner of this particular firm. We've got Bitcoin maxis, and I mean, for all intents and purposes, I'm sure many people in the crypto industry being affected by this. And guys, this is a very important piece to the puzzle, and I'm going to tell you why later on. All this connects, and the story just keeps unfolding and gets more interesting and interesting as the weekend has been going on, quite frankly. So we've got Anthony Pompliano here, partial owner, an important connection, his connection to Bitcoin, crypto, obviously very, very prominent in the space. We've also got this from Citizen Free Press here on Twitter: scenes from First Republic Bank branches in California today. Guys, take a look at this. So this is essentially creating a run on the banks. And I believe it was Caitlin Long who was saying on Twitter that, they're getting upset. The regulators are actually getting upset because Twitter is exacerbating this problem. We're talking about this on YouTube, on Twitter, and wherever else. And what they're saying is because people are learning of this and learning more information about this, people are actually going to their banks in droves and, trying to withdraw their cash. Essentially, this is a run on the banks. People taking the money out of the bank that the bank physically does not have. So just some photos here from California. So that's another interesting point. Of course, First Republic and PacWest Bancorp, plunged as fears of contagion grow following the biggest bank failure since 2008. So just some fast facts here. The implosion of Silicon Valley Bank has dragged down other regional banks as fears of contagion grow. Shares of First Republic Bank and PacWest Bancorp have plunged as much as 61% and 53% since Thursday, respectively. Both regional banks are growth-oriented and have exposure to venture capital customers. So guys, this is all connected. And, there's a reason why, even if you don't bank with SVB, you really should be paying attention, especially if you are a resident in the United States. The biggest bank failure since 2008 financial crisis has dragged down other regional banks and stocks as fears of contagion grow. Since Silicon Valley Bank announced their $1.8 billion loss related to their bond portfolio and has since been taken over by the FDIC, which we are also going to get to in a second, shares of First Republic Bank and PacWest Bancorp have plunged as much as 61% and 53% respectively. Both regional banks are headquartered in California. are growth oriented and have exposure to the same type of venture capital clients that Silicon Valley Bank had. A sizable amount of PacWest's lending portfolio is tied to real estate owned by venture capital firms, and First Republic has been wooing venture capital clients for years. So similar types of clients. Of course, then this is going to affect these types of banks. And so along these lines, we should probably talk about the impact this is going to have over the customers. I don't think enough people understand the impact of the Silicon Valley Bank collapse. What happens over the next 36 hours, guys, is going to have consequences for decades. This coming from Alex Valadis here on Twitter. I want to address millennials and Gen Z specifically, since this is our future. This is a must read. And guys, I will link this in the description of the video if you want to refer back to it. He says, to begin, here's what's happening. We know Silicon Valley Bank is the 16th largest bank in the US with $212 billion in assets. Its primary focus has been serving startups for decades. In a period of 48 hours, it has collapsed, putting the entire startup and tech industry at risk. The goal of this thread is not to dive into the details of how and why. So we've already kind of talked about how and why in yesterday's video. If you guys didn't watch yesterday's video, I will link it up here in the top right-hand corner. It's to explain to people, especially young people, why they should care. So let's begin with those directly impacted and then work outwards. So first of all, startup employees. If you work at a startup, there's a good chance you aren't getting paid next week. So the entire tech sector at this point in time is very, very vulnerable. You might get fired, he continues, since unpaid wages allow employees to sue. Even if you somehow manage to survive the initial layoffs, the future expected value of your equity just took a hit. This collapse is going to kneecap the VC industry, so venture capitalism is going to really get affected, which will make it more difficult for your startup to raise money and reach an exit event. Okay, so what about startup founders? If you were planning to raise or are in the process of raising, your chances of closing your round just drop dramatically. You're also now forced to expend valuable time and energy away from core operations to fix this PO issue. Venture capital firms, many portfolio companies are going to be decimated, bringing their investments to zero. So you guys can see how this is branching out into not just the initial people who have been affected by this, but many others as well. Some investment firms still have funds stuck in SVB. Any new deal flow has been completely shut down to focus on survival. Many venture firms will die completely. So then there's the vendors, the customers, and partners. If you work with startups in any capacity, you are now impacted. If you have an outstanding invoice, upcoming SaaS payments, etc., you are not getting your money anytime soon. This means the startups and problems are now your problems. Now, this is where it gets really scary, guys. People want to act like this is just isolated to Silicon Valley and the startup world, which I think a lot of people probably do believe. But the impact will be felt everywhere. Here's who else will be impacted. So regional banks, as we talked about up here, right? All these banks that are in the red. Why are these banks in the red? The bank run on SVB will trigger a series of bank runs on regional banks across the United States. And again, this is exactly why Caitlin Long was saying, Twitter is kind of exacerbating the problem, but she did follow that comment up with the fact that, it's not Twitter that's the problem, it's the banking sector that's the problem. He goes on to say, customers just woke up to the dangers of fractional reserve banking. There is no incentive for these customers not to switch to a big bank. So these regional banks will collapse the same way SVB did. In the process, tens of thousands of jobs will be lost. The companies reliant on those banks will have issues running their businesses. Also, big tech employees. If you think you are safe from this just because you work at a big tech company, think again. Because a bunch of startup employees that are smarter and more motivated than you are about to flood the job market, right? You think you're irreplaceable? Think again. And then finally, guys, all U.S. citizens. The startup industry has been the main driver for economic growth in the United States for decades. Let's not forget that, guys. The NASDAQ, NDAQ, let me just bring that up real quickly here. Let me throw that on the monthly just to show you guys the kind of growth that we've seen on the NASDAQ over the last, let's say, couple of decades. Basically, since the dot-com bubble, we double bounced down in here. And then a huge increase in gains. It did get affected back in 2008. But then since then, huge growth for the NASDAQ. And now what is looking like a double top could bring the tech sector down even more. If it goes under, we lose out on the future advances in electronics, healthcare, transportation, and more, not to mention tens of billions of dollars in tax revenue. I can't emphasize enough how devastating this event will be for younger generations of workers. If the U.S. government doesn't step up to fix things soon, we will be facing an uphill battle for the prime years of our career. So you guys can see how this can extend to many other facets of the US economy. Meanwhile, I mean, we're still waiting on Ripple to give us some kind of an update as to how, in what kind of capacity they have been affected. Maybe we'll get one on Monday, because I've been here on Ripple's Twitter page, still haven't seen anything. Even when I go click on Brad Garlinghouse here, no statement here from Brad either. So still waiting on Ripple. Then there's the whole USDC thing. Jeremy Allaire says Circle will use own resources to cover shortfalls as USDC moves closer back to their peg. This coming from Kenwood Capital here on Twitter. So Jeremy Allaire has basically said this: SVB has a strong franchise that is at the center of American entrepreneurship and technology industry growth. We are hopeful that the FDIC as receiver will seek a rapid purchase and assumption of a franchise as strong as SVB's to ensure all depositors are made whole. However, it is also possible that SVB may not return 100% and that any return might take some time, as the FDIC issues IOUs, so i.e. receivership certificates, and advanced dividends to deposit holders. So the FDIC, which we're also going to touch on a little bit later, they're also part of this story. They have now taken over the company. In such a case, Circle, as required by law under stored value money transmission regulations, will stand behind USDC and cover any shortfall using corporate resources involving external capital if necessary. So Jeremy Allaire stepping up. And let's just go back to USDC, as you guys know from yesterday. Let me just throw that on the hourly. Okay, we'll throw it on the hourly here. You guys know from yesterday we were talking about the depegging of USDC. Well, guys, now it's back up to near where it was. As you guys can see, let me throw a horizontal line on here. Right now it's trading at about 0.993, so just over 99 cents. But the peg at $1, give or take, is right around here. And even if I throw it on the 5-minute chart here, you guys can see, so every candlestick will represent 5 minutes on this chart. You guys can see over yesterday we did hit that threshold. We were bouncing off. It was almost forming resistance. It was coming back down, but we did hit it a couple of times. So this would be where normalcy is restored. This top level here, resistance, now we're finding on a stable coin. Never thought I'd be talking technical analysis on a stable coin. However, nothing surprises me anymore in the crypto space. So we are getting fairly close to that. As you guys can see, right over here, we're at 0.998 now. So very, very close to where USDC needs to be to regain that peg. The crypto market, of course, has been recovering as well a little bit over the last day. Over the last 24 hours, Bitcoin's recovered about 2.3%, Ethereum 2.46%, USDC coin, one of the bigger gainers, 6.17% in the last 24 hours. Polymatic's up 4.84%, XRP is down a little bit, 0.57%, but the market really just kind of readjusting to what has been happening over the last couple of days. We got XRP here right now trading just under 36 cents. So XRP has seen, let me throw it back on the daily here. XRP has seen, a bit of a free fall. Nothing really huge though. And even just bringing up Bitcoin too, you guys can see the downtrend in Bitcoin has also ceased. So Bitcoin recovered a little bit yesterday, and now Bitcoin is trading at about $20,500 per coin. Let me throw that on the hourly real quickly here. You guys can see over yesterday, Bitcoin did recover a little bit, and now it's just kind of floating here in this level, 20,500. So we were talking a little bit yesterday about how Reaper Financial decided to make the decision to move all their permanent drip USDC to XRP. They followed up with a tweet today. How did we make the decision to transfer the permanent DRIP USDC to XRP so quickly? Well, the price was still at 99.4. So this was before the contagion really hit. A 1, 2, 3. They go on to say, a community member shared an anonymous source warning about USDC. Chart checked showed an irregularity. Also, web crawler alerts for USDC showed the second watcher guru posted a USDC trouble sign. Our CEO got an immediate notification through a push bot and initiated the transfer. Stay alert, stay alive. If you aren't planning for problems, you're planning to fail. So these guys were on it right away, securing their customer funds, all before USDC did go down. I believe it did go down as low as 84 cents. Fortunately for everybody, it has recovered now. So just to give you a little bit of insight on what Reaper Financial was doing, Mike Alfred here also discussing the FDIC with regards to First Public Bank and how this is tied together. together. So we're getting more information on the FDIC. The FDIC is already on site at First Republic Bank, trying to determine the best path forward to protect depositors. Things are moving way faster than expected, given the accelerating bank run that has already reached a tipping point. So guys, what is this going to mean for First Republic Bank? We've got these photos, and apparently a bank run is underway. Confirmed just now that First Republic Bank started throttling outbound wires today. This was posted about 7 hours ago, so last night. Also, by the end of today, Saturday, they stopped processing wires altogether. The previous wording when trying to wire out of First Republic on Saturday is wire will be sent first thing Monday. Now the wording changed to thank you for your transaction. We'll get back to you soon. Not a good sign. FRC's business model depends on a gentleman's agreement. Essentially, your deposit close to 30% of the loan value with FRC in a deposit account with a 0% interest rate in return for large, mostly real estate loans at market at below market interest rates, This dynamic flipped with higher rates as there is little incentive to tie up large deposits at zero interest. It goes on to say there is no way for FRC to legally enforce this gentleman's agreement when the customer wants to suddenly move their deposits after the real estate loan is already in force. And so we're 100% clear. I have no position long or short in FRC equity or options. I am simply sharing the corroborating evidence from several good sources. We will all learn a lot more about this as it plays out on Monday morning. So guys, a lot of this is assuming we're going to see more activity on Monday and probably a lot more fierce activity on Monday, considering it is the weekend and banks are generally closed on the weekend. This is FRC stock if you guys are interested at all. And we're seeing all these banking stocks really just taking a hit right now. We did see a recover a little bit on Friday. Who knows if it's going to gap down a little more by Monday. So wanted to thank Mike Alfred for posting that. We also got Digital Assets Daily here. So the Fed is having an emergency meeting on Monday. Yes, the Fed, of course, is going to play a role in this. Gary Gensler, this is your chance to be a hero and settle the SEC versus Ripple case this weekend, giving Ripple, a US-based company, the clarity they need to help solve this liquidity crisis. Well. Ripple and XRP would certainly be the best solution to get us out of this kind of mess. This is a classic example, a textbook example of where Ripple and XRP could be thriving if we had the clarity. So the Fed to hold emergency meeting on Monday amid SVB Swift collapse. Just to give you guys the lowdown, it's happening on Monday morning, 11:30 a.m. Matters to be considered at the emergency meeting will be reviewed, determined by the Board of Governors of the advance and discounted rates to be charged by the Federal Reserve Bank. It is likely that the sudden collapse and FDIC seizure of SVB Financial Group on Friday is driving the expedited Fed meeting. SVB was the largest bank failure since 2008, since the 2008 financial crisis. Its collapse has sent shockwaves through the banking system. So guys, we're going to be paying close attention to what is going on at the Fed. Genevieve Rochdechter here also posting this. Bill Ackerman says there will be bank runs everywhere on Monday unless the FDIC does a system-wide guarantee. So again, all eyes on the FDIC. Are they going to be able to manage this situation on the grander scale? FDIC only has $124.5 billion on its balance sheet and $100 billion line of credit. U.S. banking system is $22 trillion. So obviously that math is not going to jive. FDIC assets cover only 1.26% of deposits. So that is disturbing and not instilling much confidence in the financial system. I'm thinking we're going to need another solution. Going back to what Digital Assets Daily is saying, if only we had clarity on Ripple and XRP, well, the liquidity problem that could in fact be solved. Now getting to some other things that I wanted to bring up because nothing is what it seems. And whenever something like this happens, it really gets me thinking, maybe thinking a little too hard about what's really going on behind closed doors. Tony Edward here posting this. I honestly think the Fed is trying to break the financial markets and industry. Why? Need a narrative to continue QE despite all-time high debts and to introduce a new system like central bank digital currencies. So guys, could this be a hit on the banking sector, the first hit that is going to create a domino effect that could in fact usher in the new financial system? It would be very convenient. I mean, the FDIC is in charge of this. We know that they do want to usher in central bank digital currencies. Also, CZ Binance, bringing about his 2 cents as well. Pure speculation. It almost feels like there's a coordinated effort to shut down crypto-friendly banks. So that's the other thing, right? SVB, a crypto-friendly bank. There are a lot of people in the crypto space who are invested, like, for example, Anthony Pompliano had his money there. Big tech is also very connected to cryptocurrency in a lot of ways. So he says the result, banks are shutting down. Blockchains are still running. But I mean, it does get me thinking again, how coordinated is this? We've seen other crypto-friendly banks collapse. We've seen crypto exchanges like FTX collapse. Is this supposed to be another way to get us scared, to get the retail trader out of cryptocurrency? Well, guys, this is the total market cap on the hourly. And although we did see a bit of a downturn, nothing really too big. Cryptocurrency down only about 3.3%. And then since the bottom down here early Saturday morning, we're up another 2.6%. So was it another attempt to get us out? I'm curious because it reminded me of this Ray Dalio clip from the Charlie Rose Show. This was taken in June of 2022, but it is more relevant now than ever. Listen to this.
Are we, in your judgment, in a moment in which the world order is going to change?
Yes, we're changing the world order. Okay. In 1945, we started the new world order. What I mean is, throughout history, there's a fight for control because there's no world court that you go to and plead your case. And so there's a fight for power. So there's a war, and then the winners come out of that war, and the winners set the rules. And so 1945, the United States had 80% of the world's money. Gold was money at the time. It had half the world's GDP. It had a monopoly on military power. So the U.S. set the world order. That's why the United Nations is in New York. Washington, D.C. has the IMF. The U.S. set the world order. That's why the United Nations is in New York. Washington, D.C. has the IMF and the World Bank.
And its currency became the reserve currency.
And its currency became the reserve currency because of that set of circumstances. Okay, things evolve. Things change. Okay, over history. So the three big things that are changing now that haven't occurred in our lifetime is the amount of debt and money creation, which affects the value of money, and you can see it affecting what's going on every day.
Large debt means the printing of money.
Right. The large debt puts central bankers in a choice. Do you pay it back with hard money, or do you pay it back with printed devalued money? And if you pay it back with hard money, it's hard. In other words, that's when you have debt crises. So in all cases, they eventually print money, and that produces inflation, right? So that dynamics, the first...
And that's the place we are at this moment.
That's the place we are at this moment.
Okay.
And we'll talk about that.
We'll drill down on that
in a minute. The second is when there's a great internal conflict, usually when there's a large wealth and values gap, and at the same time as you have a financial problem. Then you get populism of the left and populism of the right. In other words, those who feel disenfranchised want people who are going to fight for them. They don't want compromisers. They don't want them to be in the middle because middle means that they're not fighting for them. They want them to have guts. So that you have populists of the left and populists
and their positions harden.
And their positions harden. And there are no compromises. That's why we're potentially in a situation that you could see in one of these elections, maybe in 2024, that neither side would accept losing. Perhaps we see that. Maybe you don't follow the rulings of the Supreme Court. Anyway.
That's a serious question today.
So these things have not happened in our lifetime, but they happened many times in history. So if you look at that, you see from those patterns why the gaps become greater and the positions harden, and you see the dynamic. So that's the second. And the third is the rise of a great power to challenge the existing great power. In other words, I gave you the example of how the United States was so dominant in 1945. Now it's not as dominant. It is not dominant. In other words, China and the opposition is as strong as the United States and its allies. And so we have a conflict. And there are 5 kinds of wars. And they start in this order, just sequentially, typically. A trade war, a technology war, a geopolitical influence war. Then you get into a capital and economic warfare, which we are now with sanctions. They always happened in history. And then there's a military war. And so you could see that progression happen through time. And that creates a template. So I like to look at the template and then plot dots to see how we're transpiring relative to that template.
Wow, a lot to unpack there. Ray Dalio essentially saying, since 1945, we have been being great reset for decades. The money system obviously changed since World War II. The U.S. had 80% of the world's money, but changing organically over time. Obviously, this has shifted over the last, how many years has it been? 80 years or so. So this has really changed, and now we're finding ourselves in a situation where this current system just can't work. And my theory is that the powers that be realize this. They're looking for an excuse to crash the system, to great reset us, to usher in central bank digital currencies and other mechanisms, to control the people. But part of this is having to tear down the infrastructure, to tear down the big banks. And, the banking sector, again, another two-prong effect. The banking sector connected to cryptocurrencies. Well, why not take down SVB Bank? Things that make you go, Also, something that I wanted to point out, brought to us by Cryptomaniac 101. Someone pointed out that every bank's corporate offices were lit up tonight on a weekend. I wonder why. Now, some may think, well, yeah, look at what's happening with SVB. Of course, maybe bankers are going to go in at midnight and, do some work, figure out what the heck is going on. But why are entire floors lit up at these banks? Things that make you go, I don't know why, especially if the norm is that they are never lit up. Now, 801 Crypto also bringing this to our attention. From 2019, the FDIC, going back to the FDIC because it's important. They're a big player in this story. They are the glue, essentially, that are trying to hold this banking sector together. So the Task Force on Financial Technology, fast forward to 2023, and the FDIC acts like they are playing catch up with tech, when in reality they have been studying tech innovation for years before 2019. Here's a quote. The FDIC is particularly interested in being a bridge between technology companies and the banking sector to create an environment where innovation can thrive. This can particularly be meaningful for community banks, which may have limited resources to develop technology of their own. So is it all a show? Again, guys, a document from 2019. They want to be the bridge between technology companies and the banking sector. So fintech, filling the void, Ripple, XRP, that bridge between technology and banks? Well, Ripple and XRP are not actually listed in this document. However, Sensei XRP here bringing up a very, very good point. And even just looking at the timing on this, new broker deposit rules promotes bank fintech partnerships, December 2020. Okay, and this has to do with the Federal Deposit Insurance Company, or the FDIC, and their new brokered deposit rules. Now, check out Sandy O'Connor's LinkedIn. She has been a Systemic Resolution Advisory Committee member of the FDIC since July of 2020. So since that same year, this would have happened under her watch. And guys, Sandy O'Connor, also the newest board member of Ripple as of December 2020. Considering the FDIC has been interested in bridging technology for years, only 1 year before Sandy O'Connor entered, technology innovation and bridging the gap between banks and the technology sector, this thing is screaming Ripple and XRP to me. But that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.